Welcome to Second Take, the show that focuses on the issues behind the news. Leading global investment banking, securities and investment management firm Goldman Sachs is bullish on South Africa, with CEO Lloyd Blankfein giving the country the investment thumbs up. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Pleasure, Shannon.
Goldman Sachs chairperson and CEO Lloyd Blankfein is generally bullish about South Africa as a favourable investment destination. Can you elaborate on that?
And this is the second, major sort of voice from Goldman Sachs coming out in the second week, as it were, on this whole issue of investment in South Africa. Now, there are no bigger number crunchers in the world than Goldman Sachs. They look at everything, turn it over many, many times before they, come at an opinion. So this is a very valuable opinion. But he's also saying, well, of course, there are plenty of risks, but, they mitigate the risk by scaling according to company risk. And what was interesting was they're saying, if you ask me, are you bullish or are you bearish about South Africa, I will give you the same answer that I would give about China. Now, that was very interesting. Because we also know that, a couple of decades ago, people were skittish about China. They said it's difficult to play in that local community. And they said, look, don't invest in China. What you do is you invest in a company that's benefiting from China. So you invest in BHP Billiton in Australia, and then you get the benefit. So they avoided direct contact. Of course, what they're saying is that South Africa also has got a lot of risk. It's got a lot of problems. They know all about the problems. They know all about the xenophobia. They know all about the Treasury saying only 2% growth. But there are also other factors in the emerging markets at the moment that make South Africa quite favourable next to some of these other economies. So they're saying, on the balance of everything, we are bullish. We're generally bullish about South Africa. We have invested here. We want to invest here. We're open to investment here. And at this point in time, it's very important for South Africa to hear that message, because we're down. Perhaps the reward for these investors is potentially greater. And if they do come in, perhaps they can help pull us up, because they come in strategically and they come in at all sorts of levels. They have done their homework so thoroughly, you won't believe. So it's good for them to come up with these statements, and it was good to have Lloyd Blankfein in Johannesburg, coming into Johannesburg, and he used to be on the precious metals desk, so he was close to the gold market for many years. Prior to, of course, his huge ascendancy, he ran that desk, the precious metals desk. So in the 90s, he was still coming here. Early 90s, I think, still coming into South Africa regularly. So he knows quite a bit about the country.
Now, what does Blankfein suggest for South Africa's struggling state-owned enterprises?
That I thought was very intelligent. They're saying you've got state-owned enterprises here. We notice China's also got a lot of state-owned enterprises. When state-owned enterprises are troubled, as happened in China, what they did is they created a private sector shareholding. So they floated a percentage. They still kept state control. So, you think immediately Eskom. You still keep state control, but you list on the stock exchange, or you float, however you do it, 20% of your shares on the stock exchange. That gives people of South Africa a watching brief on you. So the transparency comes through. They're seeing what you're doing. They're seeing your profits very clearly. They're seeing your costs very clearly. They're looking at you. They're watching managers' compensation. They're looking at pay. And they're also rooting for you because you're a shareholder. And they're even betting on you. So even though they're minorities, this is how it worked out in China. So he's saying, perhaps that could be a sort of a formula. Don't go the full hog necessarily as the public-private partnership where it's a sort of 50-50. You don't even have to go that far, because there might be sensitivities from unions and other bodies about, denationalizing. You can do it on a smaller scale and still have the benefits. Have that full transparency, have the discipline of the stock exchange, follow the rules of the stock exchange, and that actually helps that entity to become a better entity, as some of our state corporations are needing, particularly Eskom, but of course the South African Airways and a lot of others.
Would it also help then to raise income for those enterprises, floating them on the JSE?
If you're selling shares, you're getting a revenue stream. So that's what people do. They raise capital. Whether it'll be a capital raising exercise, you can go on the stock exchange without necessarily having to raise capital or having a capital raising intention. But at the same time, it'll help you to raise debt because your transparency is greater, there's more accountability, so it helps all round. And I thought it was quite a clever suggestion. And of course, he would not fall into the trap of giving advice because he said, I come and give advice and I go home. Other people have got to execute it. So it's not a good idea to just dish out advice. So they've been around the block, these guys. They know what to say and what not to say and how to say it.
And especially basing it on China, which also is an emerging economy and similar to South Africa, obviously on a much larger scale.
But, we're part of the BRICS. Of course, the big problems with the BRICS at the moment. Brazil is actually at a negative growth rate at the moment. So I think it's minus 0.6% they're growing. So we think 2% is bad, but, going to 0.6 minus or minus 0.6% is a big blow. South America is not doing too well. I think overall South America is growing, but at about 0.5%. Turkey, no-go area. Well, that's not part of the BRICS, but just think of Russia. The R in the BRICS. It's absolutely no-go at the moment. And when you think of growth, this is negative growth, minus 2.7%. That's heavy blow. And China is entering a different space. And as people say, a lot of wealth is being created in China. And as Lloyd Blankford said, yes, a lot of wealth is being created in China. But when you divide it among the number of people in China, it's not so great per head. So they've still got a long way to go. And India, I suppose, is the one with the most promise in the BRICS at the moment. But you can see that things change. And against that background, South Africa doesn't fare too badly. Because in Goldman Sachs' terms, we are going to grow at 2.3%. They disagree with the Treasury. Our National Treasury says, no, we're going to grow at 2%. They say, no, you're going to grow at 2.3%. But of course, they give themselves an out because if these xenophobic problems do get worse, they'll have to come down a bit. And if Eskom gets worse, but hopefully things will get a little bit better. And then for next year, they're looking at 2.4% for South Africa. They see South Africa benefiting from the tailwind of the fact that we, at the bottom end of Sub-Saharan Africa, Sub-Saharan Africa's got 800 million people, and it's growing at 5%. So they see that as a tailwind for us. Also as a plus for the whole continent is the fact that, the outcome of the Nigerian elections was peaceful. So that's another plus.
Yeah, quite remarkable.
Yeah.
Now, Goldman Sachs International MD Colin Coleman mentioned certain factors that position South Africa well in the current world of investment funds. Can you elaborate on that?
Yeah, and it's that whole issue of where else do you go in the emerging markets. South Africa, it really gets a lot of attractive comment because of its Johannesburg Stock Exchange. So you can see that although we've had, we've got a lot of social problems that we've got to overcome. We've got government issue at the moment. Our state-owned enterprises aren't doing well. The private sector is still firm. It's a solid pillar. It's there at the Johannesburg Stock Exchange, and they can hang their investments on that. And they're saying that, it's attractive beyond expectation because the value of the shares on that stock exchange, if you look at the value of the shares, it's twice the value of what we produce in gross domestic product. So it's got a value twice the GDP of the country. And, that's quite rare. So it's very liquid. It's large and it's liquid. And they really appreciate that as potential investors.
Well, thank you very much for your insight, Martin.
It's a great pleasure, Shannon.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.